Hey all, welcome to ShareTreck. This is Raj here and welcome to our new series of earnings preview. I've already done a couple of earnings preview earlier, and today I'm going to talk about Intellia Therapeutics and what they're going to report on 4th of August for their Q2 2022 results. So without further ado, let's get started. Hey all, welcome to this earnings preview session. And let me start off by saying that it took me almost 3 or 4 days to come up with this whole earning model as well as my talking points. And I have also kept in mind the fact that we want to keep all these videos to be short. We don't want it to go on for an hour or so. First of all, it's difficult for me to produce an hour-long material. And secondly, I don't think you're going to sit and watch an hour of me talking about some earnings. So this is going to be a short video, and therefore there is going to be a bit of glossing over a few points. But suffice to say, at the end of this, we'll have a earnings estimate spreadsheet which will talk about what's going to be our target EPS for Q2 for this company, as well as our EBITDA and the revenue that we think the company is going to make in Q2 2022. It's also a bit difficult to estimate the earnings for this particular company, basically because when I score through the internet looking for news articles that talk about any revenue that comes in from collaborations or any revenue that's coming in due to some deals that they have done or sales, I can't find any. But that doesn't mean that there has been no new revenue item for Intellia. There could have been. Therefore, our revenue estimates might be a bit off when compared to what is actually revealed in Q2. It could be plus or minus. I have no idea. But I have done my best to come up with a revenue estimate out there. So with that said, I would say that the methodology I followed is to start off with the Q1 2022 P&L, as well as key points from the Q1 earnings that should have impacted Q2, and also to look at at the status of the various commitments that they made in Q1 that should bear out in Q2. For example, if they had said that they're going to do something in Q2, I have searched to find out whether they actually did it or not. And all those things have factored into me coming up with the revenue estimates as well as the expenses and the whole EPS for that matter. And we'll also look at their sales trends and expense trends to extrapolate what could be expected in Q2. At the end, we'll arrive with a revenue estimate, EPS estimate for Intellia for Q2 2022. Let's start with their Q1 report key points. When I look at the Q1 2022 reports, in their report, they said that they have presented updated interim data from ongoing phase 1 study in patients with ATTR and polyneuropathy, demonstrating that a single dose of Intellia 2001 resulted in rapid, deep, and sustained reduction in disease-causing protein. The interim readout showed treatment with Intellia 2001 at 1 mg per kilogram dose led to 93% mean and 98% maximum serum TTR reduction by day 28. With the durability observed throughout the follow-up period, they then initiated their part 2 in the polyneuropathy arm with plans to share additional data from part 1 with us in June 2022. So I followed up on that commitment, and I found that as promised in their follow-up sharing of additional data from part 1 released on 24th of June, Intellia concluded that Intellia 2001's potential to be a transformational treatment for patients with ATTR amyloidosis is becoming clearer. The safety, depth of serum TTR reduction, and durability profile demonstrated thus far highlights its potential for halting and reversing the disease after a single dose. This, in my opinion, is a positive news. And looking at the charts of Intellia, it seems the market anticipated this news from the 15th of June itself, as the share prices have started getting into a bull channel. So the bull channel formed on the 15th of June, almost 9 days before the announcement. So I guess, friends, we have to start looking out. All of us have to pool our information so that we are among those people who can start anticipating these things 8 or 9 days before they happen. And that's the objective of this channel. So if any of you have any intelligence, market intelligence, please share with us. That can be helpful for the entire community. That said, now on to the next point. In Q1, they initiated second dose escalation cohort evaluation for their Intellia 2002 for hereditary angioedema and plan to present interim data in second half of 2022. That's what they had said in Q1 2022. We are already in the second half, but not deep into the second half. We are just into the first month of the second half. So therefore, I'm not expecting them to give any massive revelations, but at the very least, I would expect them to give us an ETA for when they could present this data to us. Is it going to be August or September or October or November? Something like that. If they give us some ETA, that would be really good. They also reported in Q1 to have dosed first patient in phase 1 of 2 of a study for Intellia 5001, which is a novel investigational T-cell receptor, which is called TCR, T-cell therapy for acute myeloid leukemia. Short form is AML. And in this quarter, we should potentially hear about a new in vivo candidate also, as they promised. So I don't think I have any information in any of the press reports for NTLA 5001. And with regard to potential new in vivo candidate, they have not yet put anything on the news release to the best of my knowledge. So I'm expecting that probably in the Q2 earnings report, they may either give an ETA for it or they may name in vivo candidate. The company ended the first quarter of 2022 with a strong cash position of 995 million. The 995 million was boosted by a joint venture named Avencell. So let me just provide you a little background about Avencell if you have not been following it. There's a company called Blackstone Life Sciences, which agreed to be the sole founding investor in Avencell with a $250 million commitment. Intellia was given a 33% equity stake in this joint venture with select cell professionals to form Avencell Therapeutics. There are some expense commitments as well in this joint venture, but I don't have any information about that. So I have not assumed any further cash or equivalent gains this quarter without having more details. So I thought it'll be better to take a conservative approach and assume nothing is coming from Avencell in this quarter. Expenses, if any, are yet to be known, and will not factor into our calculation. And overall, I assume their expenses this quarter will remain elevated as in Q1 2022. Also because of the fact that we have a lot of inflation going on and there's a tight labor market. So given those things, I have kept it elevated. However, I don't think there is enough news item to suggest any increase in their revenue. Intellia had entered into a collaboration agreement with Novartis in 2015 and with Regeneron in 2020. The Regeneron agreement comes up for review in 2024, but involved upfront payments of 70 million to Intellia, and with Regeneron investing 30 million in Intellia shares. I have not been able to find any news article that talks of any payment last quarter from either of these companies. Additionally, Intellia also has a collaboration with Kyverna as well as Sparing Vision, both of which can provide milestone payments. Again, I have not seen any news report that talk about Intellia receiving any payments from these companies in the Q2 period. So therefore, I have assumed that there is no revenues out there from collaborations or milestone achievements. So it's possible that some of these collaborations may have provided revenue that has not been published. Therefore, my revenue figures are conservative and the results can be better, but not worse than what I have put here in my personal opinion. The three components of Intellia revenue so far in all quarters have been money coming in from at-the-market operations, which is basically release of equity shares. And the second is from the equity employee stock options that is given in lieu of payment. And the third is a collaboration or achievement of milestones payment from various collaborating companies, which have agreements with Intellia. So in this quarter, I have just estimated that the other payments from collaborations is not going to come in. So my revenue for this, my revenue estimate for this quarter is more conservative, and I think other analysts might have more information because being institutional, they would actually approach Intellia and ask questions and they could have got some answers or more visibility into their revenue. I don't have that, so I'm going to leave it there with that. With that, let us look at the estimation model and arrive at the EPS and revenue, EBITDA, etc. figures. And I'll walk you through my spreadsheet. So let's get there. So here we are in my spreadsheet, and let me walk you through this. Let's look at the first column, which is in yellow, and this is the column which I have computed. This is our Q2 2022 estimate. All the other columns are the previous quarters. So we are starting off with 30th June 2021 and working our way all the way up to 31st March 2022, which was the Q1. And this yellow column is, as I said, our Q2 estimate. And some of the assumptions I've already mentioned to you, but there is more granular assumption I can talk about. Annual operations cost is around 35.7 million, and I'm expecting normal R&D expense to be around 130 million, and general and administrative expenses at around 20 million. So I have a total of 150,000 as expenses. So I put the operating expenses there. And in terms of revenue, I have just assumed that it's going to be similar to the previous quarter. And I've put a figure of 11,750 out there. And all the columns that are, all the cells that are in black are calculated cells. So it all comes up automatically. And in terms of net operating interest income or expense, I have assumed similar to Q1 for the lack of any new information. And when it comes to other expenses, I have increased the expenses a little bit because we are in an inflationary environment and tight labor market. So there should be an increase in expenses. So that's what I have done out there. And that gets us to a pre-tax income of minus 14 million. And if we go down further, you can see that we have the basic average shares and diluted average shares. I have bumped up the average shares from the previous quarter by around close to 400, which is what was the factor with which it was bumped up from the previous, from the quarter before that. So I've taken the liberty of putting something equivalent to that roughly. So I'm coming up with 75,100, that is 75 million basic average shares. And that gives us EPS of 1.88 per share. And if we continue further with our exercise, we can put interest expense same as last quarter. And I'm also going to work up EBIT, earning before interest and taxes. That is coming to 138,250. And we have reconciled depreciation. Put it at the same level as the previous quarter and bumped it a little bit. And that gives me a total normalized EBITDA of 136,450. That's around 13.6 million for Q2 2022. So this is my overall revenue model. And I'm very curious to compare this with what other analysts have got elsewhere. So bear with me while I take you to the website of other companies and other analysts, and let's check that out. So I've gone to this website called TipRanks, in which they have a projection for the EPS. The consensus EPS for Q2 2022, according to TipRanks, is minus 1.28. And I think ours has come worse than this. So potentially they may have some information about revenue, because I strongly suspect that I'm missing some revenue elements. So revenue should have been better. That's what I'm thinking. Let us see what happens when they actually present their revenue. The other place that I want to take you to is Yahoo. So Yahoo has got estimates, consensus estimate from 21 analysts, and their average estimate is minus 1.31. Their low estimate is minus 2.07. Low in this case means worst case scenario, and their high estimate is minus 0.97. Minus 0.98. And I think we have come much closer to the low estimate because I have taken a worst case scenario. I've taken more of a conservative approach. So we'll have to see how this turns out. Please put in your comments what you think would be the earnings according to your opinion. I'm not very comfortable with this particular effort. That's why I spent 5 days trying to get it all together. But I'm really finding that I have a bit of blind side when it comes to the revenue portion of this model. So the chances are that Intellia will come up with a much better EPS than what I have forecasted. But I'm still within the range of what the various analysts are projecting. Again, remember, this is estimation work. We are doing this to have a better understanding of the company. With every subsequent earning estimate that we compare with actuals, we get better and better at forecasting future earnings. So this is just the beginning of the process. We may be off the mark, but it's a good beginning in my opinion. So with that said, I would like to bring this video to an end. I hope you liked it. Please put a like out there if you did. And if you're not yet subscribed, please subscribe and join our community and help us grow this channel. Thanks and have a great day. Bye for now.